Let me just quickly get to the disclaimer so nobody gets anxious about it. I am not an accountant. I am not a financial advisor. However, I am allowed to teach tax. I have been through the necessary training at the ATO, and I have been teaching tax for over 20 years. So I am always sure to make sure that I can teach you what I need to teach you and answer the questions that you ask me, but I will only be able to answer general questions. I will not be able to answer any questions that are specifically about your circumstances. In fact, can I make a suggestion? Unless someone has actually examined your financial situation and taken a proper look at your money situation, no one should be giving you specific advice about what you should and shouldn't do with your taxes. One of the problems that we sometimes see is that there's a lot of informal advice that is being shared. And trust me, unless someone's actually had a look at your books, they shouldn't be giving you any advice at all. That will include me, but I'll do my best to answer whatever general questions you have. Just pop them in the chat or pop them in the question box and I will get to them. There is already a question here. Are there any particulars with selling overseas? In terms of tax, yes, there are. But because this is a tax basics workshop, I won't be getting too much into the nitty-gritty of that. However, I will share some resources with you where you can go to get more information about whatever it might be. Now, like I said, we're going to do a bit of a look at the basics, but before we do, I want to share with you this resource, which is on our website, and I'll be sharing links with you in a moment. Because we're not accountants and we're not financial advisors and we're not allowed to give you specific financial or tax advice, we have collected together all of the accountants and financial advisors in Australia who specialize in the creative industries and are also taking on new clients. We don't have them all. Some of them have politely requested to be removed because they can't take on anybody new. But if you are looking for that kind of specific advice and support and you are not happy with your current accountant or you don't have one, then please do go and visit the Groovy Accountants. I will share this link as well as a few others with you in just a moment. And I'll go into some more details later on in the presentation about why it's so important to pick a specialist, even though they might be a little bit more expensive. But hang in there. So now, unfortunately, we've lost a couple of people. Are the rest of you still able to see me and hear me okay? Is anyone else having any technical issues? If someone could just give me a little thumbs up, that would be awesome. I would appreciate it. In this session, I'm going to go through a whole pile of resources with you. Great. Thank you, Joanna, Tim, Blake, everybody. I am so pleased. Amazing. Thanks, everyone. So I'm going to really inundate you with a whole lot of resources so that you always know exactly where to go, because one of the problems with being new to this world or rediscovering the world of tax is simply, where do I go for help and what kinds of questions can I ask and who's trustworthy and who isn't. So I'll share a bunch of resources with you, and then I'm going to be pretty dull and go through some income tax basics with you. Because in my experience, when I've been helping people with their tax situation, it's a general lack of understanding about the basics, and in particular, some of the language that we need to learn that causes a lot of problems. It can make you feel like you don't know what you're doing and that you're even a little bit stupid. Trust me, you are not stupid. Sometimes the language that is used to describe these things is unhelpful. Sometimes it's confusing and conflicting. I'm going to do my best to just break down how income tax works for the majority of creative professionals in Australia, just to give you an overview. I'm also going to look at one of the really major concerns that a lot of creatives have, which is about the difference between a hobby and a business. I'll get into that in quite a lot of detail because it is such a concern for people and they feel confused about what it means and why it's a problem and all the rest. I am going to give you a little introduction to tax deductions. That's where everybody gets super excited, but you'll just have to wait. We do that at the end. And then finally, we'll talk about record keeping because the fun never ends. So like I said, this is a pretty long webinar. It goes for 90 minutes, but you can come and go as you please. You can watch the recording later, hopefully if the technology works. There is, but you know, if you want to ask me questions, you got to hang in there. So hopefully you will. Now, just have a question about the Groovy Accountants. Andre says, I was wondering if you know if they also do personal tax returns as well as sole trader. Yes, they do. So they will do business tax returns, personal tax returns, company tax returns. They can all pretty much deal with whatever you want, Andre. So it's really just up to you to go and check out who you like the look of, get in touch with them. We don't advocate anybody in particular. We've just put up a list of all of the ones that people have recommended to us or that we have used ourselves, and you can just go and use it as a directory. Okay, let me kick off with those resources. The most important resource that I have created for you is the Dropbox. I'm going to put the link to that in the chat now, and hopefully you will all be able to access it. Let me know if you have any trouble with it. I hope it works. Hang on 1 second. I've popped it in the wrong spot. Here we go. All right. Can someone just make sure, click on that for me and just let me know if it takes you to a snazzy Dropbox full of additional resources. Hopefully it does, or you can scan the QR code on the screen right now. This is a permanent link to the Dropbox that you can just have for as long as you need it. So it's not timed to the webinar. It's not going to expire at any time, and it is regularly updated. So as long as you have that link, you will be able to access the Dropbox. You can download any information that you want or just view it online. And all of the things that I'm talking about today are in there, including the links that I'm going to be sharing with you. So all the links I've already shared and the ones that are coming up are already in there. There's also a workbook in there, which you do not need right now. You can download that later. It also has links and additional information about everything that I'm going to be talking about tonight. Like I said, you don't need it. It's just additional information that you can download if you want to, if you need it. Now, here are some more links to resources that we recommend. And again, these are all already in the Dropbox for you, so you don't need to click on anything. And the first one is from business.gov.au, which is a website that's been put together by the government to help people when they are starting their own businesses, starting and running businesses. And this is a pretty good general information site about everything to do with small business. But of course, this page is specifically about tax. And the reason that we recommend it is because it uses simple language that makes it kind of easier, not easy, easier to understand some of these concepts. But of course, if you want information about tax, then really the main place to go is, of course, the Australian Taxation Office. Now, I'm not just going to be talking about how this world works if you're running yourself as a business. I am going to be talking about working as an employee as well, but there is some pretty good general information that you can get from the ATO's website. They're trying to be a little bit easier to navigate and a little bit more groovy. I'm not entirely sure if they're succeeding, but you know, you be the judge. You can go and have a look at it and see what you think. It's pretty text heavy, and look, some of the language is hard to navigate, in all honesty, but do your best. There are a couple of other resources as well that I'll quickly mention. And one of them is the Tax Basics for Small Business video series, which, you know, is definitely worth a look. It goes through all the same stuff that the other parts of the website cover, but it does it in video form, which for some of us is a more enduring way of learning and remembering stuff. So yeah, you can go and watch a whole bunch of short videos all about how tax works, and hopefully that will be a little bit more palatable. So hi Meg, you should, I hope, be able to see and hear me already. This isn't like Zoom. You just click on the link and it gets started. So hopefully you'll be able to catch up with us soon. Believe it or not, Diana, all of the links are all in the Dropbox. So as long as you have the Dropbox link, you have everything that you need. I'll just share that with you again so you can go and find it. Believe it or not, the ATO also has its own TV channel. Can you believe it? No, neither can I, but it's true. tv.ato.gov.au has webinars and videos and a whole range of resources there that you can go and watch. Pretty good for insomnia as well. No, I won't be rude. Go and check it out. If you need to, it's a good resource. Couple of other resources that we have on our website as well. Creative Plus Business. Every year we release our Tax Time for Creative Business article, which is basically the same information that I'm sharing with you tonight, but all the links and everything that you need are there. You can go and check that out. And of course, as already mentioned, we have the Groovy Accountants as well. You can go and have a look at them too. So those are all the resources. I know that was just a big blanket of everything, but hopefully that gives you plenty to get you started. So, like I said, I want to start with the basics. Please don't think that I am condescending to you. I am not, I promise. My approach to this kind of learning is pretty simple. I like to start with the assumption that you know absolutely nothing, so that if you do know absolutely nothing, you won't feel left out or left behind. And that's really important. You know, one of the big issues around this is if you feel left out or left behind, if you feel like this is too hard, if you feel like you're dumb because you don't get it, then you might stop trying to understand it. You might think, well, this world is not for me, I'll just ignore it. And of course, that can lead to all kinds of problems later on down the track. Some of you who are joining me might have a more advanced knowledge of how tax works, which is great. If you do, hang in there. We are going to get through some more complicated stuff. Just if I'm talking about things that you already understand and know all about, just take the opportunity to feel smug. I mean, you know, that never happens. So, but having said that, I've also experienced a lot of myth sharing in the creative industries. People get told something that isn't true, but they believe it because it came from someone that they know, and then they share that untrue information with other people, and so on and so on. So maybe this is also just a good opportunity to have a little check-in and see if you're on the right page. This next slide is probably the most important thing I'm going to share. And again, I want to make it really clear that one of the issues that we have with all of this is it's kind of a language issue. The concepts that we're talking about are quite simple, but the words that are used to describe them get really complicated. And one of the issues that I have when I'm talking to people about tax is a fundamental misunderstanding of what taxable income is. You only pay tax on your taxable income. And your taxable income is what's left over after you've gone through the calculation on the screen. So we always start with your assessable income, and I'll go into that in more detail. And we look at all of your assessable income all combined. And then from that, we subtract or deduct the expenses that you're entitled to. What's left over is taxable income. That sounds simple, I suppose, when I explain it, but the problem is that the terms assessable income and taxable income feel like they should be interchangeable, but they are 100% not interchangeable. They are really, really different from each other. So I'm going to stop sharing my screen for 1 second. I'm going to pop you up down in the corner so that my screen gets a little bit bigger, and we are going to or not, maybe. There we go. Hello, how are you? That's my big face. All right, so I'm going to draw stuff for you because I feel like that's going to help us to understand, right? So when we're going through this process, we start with our gross assessable income. If you are visually inclined, and some of you probably are, I recommend drawing along with me. Sometimes drawing it, writing it down and drawing the pictures helps to just let it stick in the brain. Not for all of you, but you know, if you're wired that way, it might work. So we start with our gross assessable income. So gross means the whole amount. And of course, income means all the money that's come in. I want to talk about assessable for a minute. So what that means, assessable, that means that the income that you've had, the money that's come in, can be assessed for income tax purposes. Not all of the money that comes into your life is assessable for income tax purposes. Now, you're going to have to do a little bit more research on your own situation to help you work all of this out. But in generally speaking, income would be classified as assessable if it has something to do with your professional life or lives, because I'm expecting that many of you who are watching this are slashies and you have multiple different kinds of things that you do in order to make money, which is perfectly normal in the creative industries. And so all the money that's coming in from all those different sources is probably all assessable income. If it's money that's coming in for because it's related to your professional life, that includes anything that you earn through your tax file number. It includes anything that you make through your ABN. It also can include things like grants. If you are given a grant for professional purposes and you use that in order to further your creative practice or work on an arts project or whatever it might be, it might go here into the assessable income classification. Of course, always make sure you check. What is non-assessable income is usually anything related to your personal life or to your private activities. Now, again, it's not always the case, so make sure you check for your own circumstances, but I'll give you some examples of non-assessable income. So, for example, a gift of money is non-assessable income. I mean, if it is a substantial gift, if it's like $10,000, the ATO is going to ask some questions, but $500 or $100 that someone gives you as a gift, that's not assessable income. Other things that fall into this category includes things like includes things like inheritance. In Australia, we don't pay any inheritance tax, so that's non-assessable income. It also includes any winnings that you might get from the lotto. We don't pay tax on lottery winnings here in Australia. We also don't pay tax on gambling winnings unless you're a professional gambler. If you're a professional gambler, then anything you win through gambling would be classified as assessable income. And then you might want to think about how to reduce that income by, potentially opening an art museum in Hobart or something. Just a thought. Now, there's all of that, I think, is relatively straightforward. So generally speaking, money that comes your way for professional work is going to be assessable, and money that doesn't, it's got to do with your private life, is not. But here's the big but. One of the things that is non-assessable is, hang on, I can't spell and talk at the same time, is any money that you make through a hobby. Okay, I'm just going to pop that there for a moment and come back to that. I just wanted to stop for a second because I can see some questions. Hello, would competition winnings be assessable or non-assessable? Great question, Taylor. It would depend on what you won for. So if you won an art prize and you're a professional artist, or you're working your way towards becoming a professional artist, then it would probably be classified as assessable. But if you were a professional visual artist and you won a prize for best karaoke singer, then it's unlikely to be assessable income. So it really is going to be dependent on what competition we're talking about and what your practice is. I hope that answers the question. Okay, if not, please ask me again, because otherwise I will be able to help you out there. Now, so that's what we start with. Let me just go back to, and by the way, there is a link in the, Dropbox that will help you to have a look at this. So there is more information about what constitutes assessable and non-assessable income through a link in the Dropbox that you can have a look at. 1 second. Hopefully you're all with me so far. You're not too worried or freaked out. Let me go back to my drawing so we can make sure we're in the right place. So that's what we start with. And at the end of the financial year, which is at the end of June, you will have a calculation of all of the gross assessable income that has come into your professional life through various mechanisms, all added up. That's the starting point. And then we subtract, that line means subtract, we subtract any of your eligible expenses from that amount. Those eligible expenses are, of course, called deductions because they are deducted from your gross assessable income. I want to make this really clear, and I hope it makes sense. Sometimes I talk to people and they say, I'm going to go and buy a computer for $1,000 and then I will get that money refunded to me by the tax office. That's not how tax deductions work. When you go and buy something that might be an eligible tax deduction, the tax office doesn't give you that money back in your hand. It's not the same thing as like a refund or a reimbursement. What's happening when you buy stuff is that you are deducting it from that gross assessable income, which means you are eventually lowering your taxable income. The lower your taxable income, the less tax you pay. And it can seem like you're getting a reimbursement, but I've talked to many, many disappointed people who have realized that that's not the case. And I just wanted to take this opportunity to make sure that we were all on the same page. Certainly buying things, eligible expenses as part of your professional practice is a good idea. And those things will potentially be a tax deduction. We'll talk more about that in a moment. But you won't get that money reimbursed to you from the ATO. It will simply lower your taxable income, effectively lowering your tax bill. But I'll talk more about that in a moment. So hopefully that basic information makes sense and we've got a little bit of a picture there of how this actually works. And I am going to go into more detail later on in the webinar about exactly what constitutes an eligible expense. But usually it needs to have some direct connection to the income that you have made. There are certain exceptions to that, but generally speaking, it's a professional tax deduction for you if it is money that was necessary for you to spend. And that's an important word to remember, necessary. It was necessary for you to spend that money in order to continue working on your professional practice. Good rule of thumb, I'm going to go through a list later, I promise. We have to wait until the end though, okay? So what I'm going to do now is I'm going to talk more about how this process works, and then I'm going to come back to deductions. But I always do deductions at the end because if I did them in the middle, then you'd all leave, which I do not want you to do. I want you to stay for the learning. So, now I'm going to take a breath and I'm going to just see if anybody has any questions while I switch my screen back. One short moment, please, everybody. If you have any questions, now is the time to ask me. I'm keeping an eye on things, see if anyone's got anything. Can I get a thumbs up if this is all making sense so far? Hopefully it is for some of you. Hopefully those of you who went and got a glass of wine earlier are now, feeling like that was a good idea. I'm a little bit envious. I'll have one later. Now, like I said, this does sound a little bit basic, but understanding how taxable income works is super important because it's your taxable income that you actually pay tax on. The higher that is, the higher your tax bill will be. The lower that is, the less tax you're going to pay, which is why it's so important. Oh, good. I've got some thumbs up. Thanks, Lisa. Thanks, Andre. Now, the next thing I want to talk about is tax file number or ABN. So not all of you are going to be in this position yet. Some of you might still be on the edge of not knowing whether or not you're a professional or a hobbyist and not understanding what that means, and that's totally cool. I'm going to get to that in a moment. 1 second. I'm just going to pop my face back in so you can see me. Hello there. I just want to talk about the different ways in which money can come into your professional life. And there are going to be two main ways that this happens. You'll either make money through your tax file number or through your ABN. I'm going to go into a bit more detail about that in a moment, but I've seen that Graham's got a question. Hi, Graham. Would the taxable income be lower than 50K as the first 18 to 20K you don't pay tax on? Well, we're going to talk about the tax-free threshold in a moment, Graham, but I don't really understand the question. Would the taxable income be lower than 50K compared to what? It would be lower depending on how much your taxable income is. The tax-free threshold is always there. I don't really understand the question, Graham. You might need to ask me again. Perhaps I'm being a bit dumb about it. Let me have a look at some of the other questions. So Kim has a question here. What happens if you work part-time to supplement your business? I'm so glad you asked that question, Kim, because I'm about to talk about it now. Now, it does really depend in some ways about what kind of business you are. I'm going to assume that the majority of you are sole traders. If you have an ABN at all, then you are a sole trader. But I'll get to that in a minute. First and foremost, we need to talk about any money that you make through your tax file number. And I think the best way to track your gross assessable income is to do so through these numbers, because again, the language gets really complicated. You, for example, might be called a contractor if you are working with your ABN, but you might also get called a contractor if you're working with your tax file number. So I don't find the language to be as reliable as the numbers. Think about the numbers. Which number are you using in order to make that money? And that's going to help to dictate how this works. You will know if you're using your tax file number because you would have completed some sort of a form like this, when you would have had to ask questions about things like, what basis you're being paid, and, whether or not you have a HECS debt, and you would have been, participating in the tax system as an employee. So that's what I want to talk about first. I want to talk about how tax works when you're an employee, because I'm going to make the assumption that a lot of you probably are or have been employees, and so it's just kind of easier to start there. I'm going to once again draw a picture for you. So give me a second while I make all of that happen. Oh, hang on a sec. Okay. Here we go. So even if you are not currently working as an employee, this will hopefully still help, and I will get it moving. Now, I'm a writer and a filmmaker, and I'm a bit of a show-off, and I have lots of skills, but drawing is not one of them. So I want you to be kind and don't be too judgy while I try and explain to you how employee tax works when you're working under your tax file number as an employee. There are 3 participants in your tax life when you are an employee, and it doesn't matter if you're full-time, part-time, or casual. This is how it works for everybody. So we have you. Okay, so that's you. You are the employee. Part-time, full-time, casual, contract, doesn't matter. If you're using your tax file number, I'm going to call you an employee. And then we have your employer. There's your employer. Now, in my drawing, you and your employer look quite similar. So just give me a second while there you go. See? Incredibly different. And then we have the third participant in this particular game, the Australian Taxation Office. I don't actually think that the ATO is a terrible monster. I have to be completely honest with you. Most of course, all the information I'm sharing with you has come from the ATO. And the other thing that you need to be aware of with the tax office is that they've got a hell of a lot of experience dealing with creatives, okay? The thousands and thousands of people in Australia who are making some kind of money from their creative practice all go through the ATO system. And there are, in fact, 3 tax rulings specifically dedicated to creative practice that I'm going to talk about a little bit later on. So never fear, the ATO are much more friend than foe, but it's still funny to draw them as a monster, which is why I've done it. So here's the situation. When your employer pays you, okay, when they give you your, wage, they don't actually give you the whole amount. They withhold some of it from you. So they give you some of it and then they keep some of it. And again, here's the question, what do they do with it? Well, I'll tell you. What they do is they take that withholding and they give it to the ATO. This is called pay as you go income tax. And the next part of it is called withholding. So when people talk about PAYG withholding, what they mean is your employer is withholding it from you. You're not getting it in your pay packet. They're taking it away from you. What's important is we need to talk about what happens next. So once your employer has withheld that little chunk from you, that little chunk of tax, what happens to it then? Well, it goes to the ATO. Now, in actual fact, it sort of just goes into a big trust. The ATO just holds on to it until the next steps occur. But I've just found it helpful for previous participants in this webinar to give you a kind of visual metaphor for what's actually going on. So here's the visual metaphor. Think of it this way. Okay? What's happening is every time your employer withholds a portion of your income as tax, it goes into an imaginary bucket. Not a real bucket. Okay, please don't ring up the ATO and ask them questions about your bucket. There is no bucket. This is an imaginary bucket. It's a visual metaphor bucket, okay? But imagine it in that way. Imagine that for the whole of the time that your employer is withholding tax from you, that all that money is going into a bucket with your name on it, okay? All year, all the way through the financial year, even if you've got multiple jobs where you use your tax file number, some of it related to your creative practice, maybe some of it not, doesn't matter. It all goes into that same bucket. At the end of the financial year, once the financial year is concluded and all of those calculations have been done, you can then access all of the information about how much tax has been withheld from you by logging into your MyGov account here. That will tell you how much money has gone into your bucket. The next step is for you to complete an income tax return. And again, I'm going to use that word very specifically, an income tax return, which is, of course, a form that you have to fill out to tell the ATO what you've been doing, perhaps in addition to your employee work. It's also a place where you can report other kinds of income. So if you have an investment property or if you're getting Centrelink or whatever it might be. And it's also the form where you declare any of your tax deductions, which of course we're going to go through in a little minute. Once you've completed that form and you submit it to the ATO, a calculation occurs. The calculation is how much tax do you owe and how much tax has already been put in your bucket. I like to think of it, and I'm really mixing my metaphors here, so, if you get lost, my apologies. But, I like to think of it as you're at the all-you-can-eat buffet, okay? So all year you dine at the big tax buffet, okay? So we all go to the doctor and we drive on the roads and we attend university or we go to school or we put our kids in childcare. We all participate in things that our taxes pay for. And all year, we're kind of accumulating a tax bill as we go along, nom, 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 nom. And then at the end of the year, the ATO says, here's your tax bill. But in this case, the money to pay that bill has been put into your bucket already. Hopefully, fingers crossed, more money than is required has gone into that imaginary bucket. So once the bill has been calculated and the ATO tells you how much money you have to pay, they'll look in your bucket and say, oh, no worries, actually enough money is in your bucket, and actually there's a little bit too much money in your bucket, so they can pay the tax bill and they give you a refund of what's left over. Now, that is a little bit silly and super simplistic way of explaining it, but hopefully it makes sense now. And I'm just going to hold that picture up there for a moment longer, so those of you who are kind of new to this world can see what I'm talking about. This is the world that most adults in Australia have participated in, at least to some degree, and that's why I like to start here. Because if you understand this, that's good. You've got the first half. Now we need to talk about what happens when you use your ABN. But before I get into that, I'm just going to see if we've got any questions. Diana has asked a question. If the gross income reflects an invoice already paid to you, but which has not been completed, so you haven't actually spent all the expenses, as the service hasn't been completed and it's the end of financial year, the taxable income would not be exact. That's true. Should I add the expenses even if I haven't spent them yet? That's a really good question, Diana, and the answer is no, unless you're using accruals accounting, which I suspect you're not. Most sole traders and most sort of individual practitioners calculate their books based on cash accounting methods, which means that you're accounting for the money when it arrives in your bank account or when you spend it. What you can do in that situation, Diana, is go to your accountant and they will be able to put together a process where the whole of the amount won't necessarily be classified as part of your eventual taxable income because there are expenses yet to be paid. You can't do that yourself. It's actually quite complicated, but an accountant can do that for you quite easily. You just need to explain the situation to them. Because, Diana, as I'm sure you can imagine, that is a really, really common occurrence. It has actually happened to us on a number of occasions at Creative Plus Business, and accountants know how to deal with that stuff. So that's a really good reason to go and see an accountant, particularly one of the groovy ones. So, Kate. Hi, Kate. Where have I been all your life? Well, I've been hovering around the edges of it for a while, but I'm very pleased that picture makes sense. That's good. Pamela says, stocks is non-assessable income. Now, Pamela, I can't answer that question because for some people it would be assessable income if dealing with the stock market or dealing with investments was their profession. So can't answer that question for you. Like I said, whether or not something is accessible or non-accessible is absolutely dependent on your specific experience. And I can't answer questions about your specific experience because I haven't met you or looked in your accounts. So that's definitely a question for the experts. All right, well, buoyed up by Kate's enthusiasm for what's going on here, I'm going to talk about what happens next. So in addition to, or instead of, depending on your circumstances, but in addition to any tax file number income that you might have, you might also have ABN income. So now I want to talk about what happens when you make money through an ABN. And for many of you, I would actually suggest for most of you, the reality of your financial life is going to be a combination of the two, because that's actually how it works for most people. So the thing to remember is, unless you're running a company or a more complicated structure, if you're a sole trader or in a partnership, then the money that you make through your ABN gets tied together and included with any money that you make through your tax file number. It actually all gets jumbled together and it all becomes your gross assessable income. I'll talk a little bit more about that in a moment. So those of you with an ABN, again, we have 3 participants in the game. And once again, I'll ask you to forgive my silly drawings. Hopefully they make sense. So we've got you. There you are again. And now we're going to call you a whole bunch of different things. We might call you a sole trader. We might call you a contractor. We might call you a small business. We might call you a freelancer. We've got all different kinds of words for you, which is why this gets so confusing. It doesn't matter what we call you. You have an ABN. That's the thing to remember. And we also have whoever is going to be paying you. Again, let's make them look a little bit different from you, just so, you know, we're not getting confused. Now, this person also has lots of different names. So they might be your client. They might be a customer for products. They might be an audience member who's bought a ticket. They might be a government funding organization. It might be money that you make through crowd funding, or could be competition winnings. This could be money coming in from all different kinds of sources. So I know that was really hard to hear me then, and that's all my terrible handwriting. But money can come in from all different kinds of sources, and we give that all different kinds of names. But the one constant, of course, is our old buddy, the ATO. Now, just a reminder, the previous drawing, let me see if I can find it without causing too much hassle. Remember, when you're working with your tax file number as an employee, you don't get paid the whole amount. Your employer withholds some of it from you and puts it in your bucket. So what happens when you have an ABN? Here's your bucket sitting there ready to be filled. But as you probably are already aware, when your client or customer or audience member gives you money, they don't withhold anything. They give you the whole amount. Which begs the question, who is going to put money in your bucket? I think you've already guessed the awful truth. The only person who is going to be responsible for putting money in your bucket or preparing for that eventual tax bill is you. This is still called PAYG. It's still income tax, but now we don't call it withholding anymore. It's called installments. Okay. PAYG withholding is when someone else withholds it from you, usually an employer. PAYG installments is still your income tax, but no one is withholding anything from you. You are now responsible for making sure that the money gets paid. And for some of you, you're going to have both. So you'll have some money going into your imaginary bucket from employers, but then you'll have other money coming in from your ABN where that's not occurring. And this is one of the big problems that I see quite often. People make the mistake of thinking that either money is being withheld somewhere, it's just not visible, or the money that's being withheld from your tax file number work is enough to cover, whatever bill you might be, creating as a result of your ABN. And that's not the case. Money that you make through your tax file number and the money that you make through your ABN, if you're a sole trader or in a partnership, all gets lumped together and it all gets included as gross assessable income. Yes, there are deductions that you can subtract from that, but that could be the reason why some of you might have experienced a bigger tax bill than you were ready for because you weren't aware of how this works. So I'm going to talk to you more about how to navigate this because this is where it gets really complicated. But even if you're exclusively making money through your ABN, then you still go through the same process. So you still have to complete a tax return, the form that you have to fill out at the end of each year, telling the ATO all the stuff you've been up to and all your different kinds of income and deductions and everything. And then the ATO will do a calculation and they will tell you how much money you owe, exactly the same as if you were an employee, except unfortunately this time you might have a bill that you're not ready for. And I'll share with you in a moment my 3 preferred ways for dealing with that bill. But before I do that, I'm going to just have a look at some questions. So Andre, you've asked the question, would this be the same for a partnership? But because I was talking, I don't know what this is. So you might want to ask me again. Unfortunately, Marie, I'm sorry if you can't hear me. Yes, thanks, Jackie. Jackie's now my tech advisor. I appreciate that very much. Refresh your screen if you can't hear. Michael has said, I'm not a financial advisor, but my understanding is if you sell a stock in less than a year, the capital gain is assessable as normal income. That's potentially true. If you sell a stock that you've owned for more than a year, a portion of the capital gain is taxable in the current year. Yes. So I didn't really want to get into capital gains tax, Michael. It's slightly more complicated than where we are right now. But either way, I think the important thing is that if you have any other income aside from the two areas of income that I've already spoken about, ABN income and tax file income, it's really important to go and actually get advice from someone who's seen your books and can help you out. Sorry. And Andre, hello. Was the way you do PAYG as an ABN the same as a partnership? Yeah, in a way. So if this was, where am I up to? Okay. So if this was you in a partnership, Andre, then the amount that would be counted towards your gross assessable income would be your share of any profits that the partnership has made. So if the partnership makes $1,000 profit, then that $1,000 will be usually divided equally between the partners or according to whatever your partnership agreement is. It does get more complicated though with a partnership, obviously, than what I'm explaining here. Again, it's a good idea to get an accountant to help you. So, hi Marie, you are in, we can see you, we can wave at you, hello. Unfortunately, we have had some tech issues tonight, but you'll be able to watch the recording back again later. So I hope that works for you. The rest of you can still hear me. I'm sure someone would have told me that this happens. So Meg, hello Meg, what happens when the project cuts even or makes a loss? Well, it's never, your taxable situation is never calculated based on an individual project. It's always based on what's happened with your finances over the whole of a financial year. So from the 1st of July all the way through to the 30th of June. You might have projects in there that break even or run at a loss, but then you might have other things where you've made a bit more money. And what's really common is people might do project work that they get funding for. They might do ABN work, you know, as a sole trader or a partnership. They might do, you know, tax file number work as a teacher or as an art worker. Ultimately, all of that money going in and out has to be added together and calculated to help you figure out what your tax bill is at the end. So again, if that feels like too much maths, definitely get some help. Thank you, Megan. I'm glad you can hear me. Okay, now let me have a look and see if there are any other questions that I've missed. No, nothing so far. Great. So please, let me go back to my little calculations here. If you have any questions, now's a good time to ask me. What I want to just quickly talk about now is how much tax you're going to have to pay. So on the screen right now are the residential tax rates for 2022, 23, 24, which is, of course, the year that we're in right now. The new tax rates will be coming in on the 1st of July, but I haven't talked about those because they're not relevant for what we're doing right now. I'll talk about those next year when I do this webinar all over again, as I always do. One of the things to be really clear about is that you don't pay tax on the whole amount of your taxable income. So as Graham was mentioning in an earlier question that I saw, when it comes to your taxable income, which is here, in Australia, we pay what's called a marginal tax or a layered sort of tax. So in other words, the less taxable income you have, the less tax you have to pay. And the first $18,200 of your taxable income is not taxed at all. That's called the tax-free threshold. After that point, tax sits at about 19% in the dollar, but only for the amount of money that you make between $18,201 and $45,000. Each layer kind of adds on to the previous layer and allows you to calculate as you go. A lot of maths, I understand, but still, you can actually calculate as you go how much tax you're going to have to pay. For those of you who are working exclusively with your tax file number, you probably don't need to worry about that, although there are calculators on the ATO's website that will help you to work this out. For those of you who have combined income or who are getting your money through your ABN and other sources, for example, this is really worth learning and getting the hang of. Unfortunately, in this webinar, I can't sit down and kind of go through it with you in a painstaking way. I wish I could. There are calculators that you can use to help you. But essentially, particularly if you're a freelancer, it's kind of your responsibility to keep an eye on how much tax you're eventually going to pay, because the last thing that you want is to get a tax bill that you can't afford. So those are the tax rates right now. What I want to do next is actually have a look at the different ways in which you can prepare for that eventual tax bill. And then I want to jump into hobby versus business, because that's really important. So there are essentially 3 ways that you can prepare for an eventual tax bill as you go through the year. And the first one is the ostrich method, which I imagine is favored by some of you joining me this evening. The ostrich method is basically just to ignore your tax responsibilities for the whole of the year. There's nothing illegal about that. You are allowed to ignore your tax responsibilities while the financial year is happening, but I don't recommend it. Honestly, if I may be bold, people who get their whole income through their tax file number can usually afford to ignore what's going on, because really someone else is withholding their taxes from them, and it's just a calculation that's happening somewhere in the background, not at front of mind. But for the rest of us, those of us who are freelancing or running small businesses, getting money through our ABNs or just trying to work it out, ignoring our financial situation is a dangerous idea. I talk to lots of people who ignore their financial situation all year and really only start thinking about it now, which is, of course, why we do this webinar every June. But as I'm going to talk to you about in a moment, my recommendation is to actually keep an eye on it throughout the year. Having said that, if you've elected for the ostrich method, it's fine. You haven't broken any laws, but it is going to mean that you don't know how much money is in your bucket. You don't know what tax deductions you're entitled to, and there is a possibility that you might get lumped with a bill that you either don't understand or can't afford, or both. One quick thing I want to say about getting a tax bill, because it does happen. If you get a tax bill that you can't pay, please contact the ATO immediately, either directly or through your accountant, to work out a payment plan. The ATO are much, much more interested in you paying that money off slowly over a period of time than they are in, hassling you for the whole amount. But if you wait too long, you can sometimes run out of options when it comes to putting a payment plan together. So if you get a big bill and you're not ready for it and you haven't got the money, I know how terrifying that can be. Trust me, I had that experience myself. But please contact the ATO and get a payment plan in place as quickly as you can, because it might be more manageable than you think once the panic subsides, which I hope it does for you. The second thing that you can do to prepare for that possible tax bill, and again, this is specifically for those of you who are working under your ABNs, is that you can actually make contributions to your own bucket as you go through the year. This is the PAYG installments that I was talking about. And it's a very straightforward process. You simply have to fill out a couple of forms and then give the ATO whatever amount of money you would like to in order to pay money towards your eventual tax bill. This is a really good method for those of you who are pretty sure you're going to get a tax bill, but you're not very what's the word I'm looking for? You're not very diligent when it comes to keeping an eye on things like your savings, which I'm going to talk about in a moment. This is a good method. It does have one downside. Once you've given that money to the ATO, you can't get it back out again. So while, yes, that money is definitely going to get put into your bucket and go towards your eventual tax bill, if you run into financial difficulty, you won't be able to get that money back out again. it's kind of gone. So I do recommend this method, particularly if you're not very disciplined with your money and you feel like this will help you with your anxiety about missing out on a bill or whatever it might be. And certainly the process works exactly the same as if your employer put that money into your bucket. So if you put more money into your bucket than you have to, you will get the surplus refunded to you, but not until you complete your tax return, same as it is for everybody else. So that's a good, if strict, method that you can apply. Of course, the one that most people use is the saving up method, which is pretty straightforward. The saving up method simply means going through this calculation that I mentioned earlier, giving a bit of an estimate of how much you think you might have to set aside for an eventual tax bill, and then putting it into a savings account. Now, the important thing about the savings account is that it can't be easily accessed. I wouldn't recommend putting it into an account that you can tap or use a card for, because otherwise you'll just spend it, because you're a human being and that's how we work. But a separate online savings account or something like that is a really good idea. The money's there, and trust me, you will get into the habit of just ignoring that money as time goes by. Having said that, though, the money is still available to you. So if you do run into an emergency situation or something terrible happens, you can still get access to it if you have to. How much money you should contribute to your bucket or contribute to your savings account is really up to you and the calculation that I mentioned earlier. But as a general rule of thumb, most freelancers and sole traders that I talk to put somewhere between 10 and 20% of whatever they make into that separate savings account. Of course, that's, as I mentioned, that's completely up to you, and we haven't talked about your tax deductions yet, but even if you just put 10% of all of your gross assessable income into a separate savings account to prepare for your tax bill, you'll be getting into some really good habits, and you'll be starting to pay attention to this as the year rolls on, as opposed to just worrying about it at the end, which, like I said, I don't recommend. Now, I want to get into hobby versus business, but before I do, I want to, of course, see if anybody's got any lovely questions for me. Andre has a question. Is collecting money for tax bill the same as setting aside the 30% GST? Okay, two things there. The GST is not 30%, it's 10%, Andre, so I'm not entirely sure where you got the 30% from. Yes, and it is different. GST stands for Goods and Services Tax, and that is a completely separate tax to what I've been talking about, which is income tax. I'm a little concerned about where the 30% came from, Andre. I mean, I suppose if you were putting aside 10% for GST and 20% for your income tax, that might lead to 30, but questions need to be asked, Andre. I'm confused about that. So let me have a quick look. All right, Jane, hello. If you're in a partnership but you also have other sole trader income individually, do you have to do your tax returns together? They do have to be done at around the same time, otherwise it can get really complicated, Jane. I would usually recommend that you do them at the same time, but you don't have to do them together. You have to do them simultaneously, same as if you have a spouse or, you know, other kinds of situations like that. You'd have to do your partnership income tax return first, and then you'd be able to do your individual income tax returns after that. Hi, what do royalties come under, as in is something as income or something different? No, royalties would usually be considered assessable income. So they go into the mix along with any money that you make through your tax file number or your ABN or whatever it might be. So yeah, I'm assuming that you're getting royalties from professional creative work, so that would be the case. But again, your individual circumstances, error one, you're going to have to go and check that out. Hi, Pamela. If your main income is through an employer, which is already mentioned withhold some of the income, and less income is through the ABN, will you still enter into the category of your full income, and will therefore need to pay more on your ABN incomes? No. If your ABN is as a sole trader, then all of that money will get mushed together, as I mentioned. You will have to set aside some of your ABN income, in my opinion, to help you prepare for an eventual tax bill. But if you're worried about it, you can actually go and talk to an accountant and get some more information. So Andre, you got 30% from your TAFE teacher. It's what I call the tax you put in the invoice. So like when we get paid our invoice, we put 30% aside. Okay. But Andre, if you're not registered for GST, you don't have to put aside the GST. So I'm still confused. Let me go and see if there are any other questions. I know there are going to be GST questions. I've opened the GST door and I'll get there very quickly. But first I want to talk about hobby versus business. So this is going to be really frustrating for you. And I can already feel the frustration happening. But as previously mentioned, the reason why this is important is if we go all the way back to this idea of assessable income, okay? And I mentioned that if you make any money through a hobby, and this is true for everyone, if you make money through a hobby, that is considered to be non-assessable income. So let's say, for example, I like to make cakes and I sell those cakes at a market stall on a Saturday morning, but I'm just doing it because I enjoy making cakes and I like hanging out at the market stall and seeing people. Any money that I make from that would be potentially classified as income from a hobby, which means it would be non-assessable. So that means I don't have to include that income as part of my income tax calculations, but it also means that any of the money that I spend on making and selling those cupcakes cannot be a tax deduction. You can only claim tax deductions from assessable income. If it's a hobby, no tax deductions are eligible. Now, here's the problem. The problem is that we are a bit of a thorny situation for the ATO because what most of us do for professional purposes could also be classified as a hobby if done by somebody else. So most of the things that we do, so, writing and drawing and dancing and acting and, making computer games and all that sort of stuff, all of that could also potentially be a hobby. What we do for a living, other people do for fun. This is not a problem that other professionals have, although it is the same problem that professional sports people have. And one of the tricky things about it is how can the ATO tell the difference between someone who is conducting a hobby and someone who is conducting a business? I know what some of you are thinking, surely it has something to do with the money. It's not about the money. It is possible to make money from a hobby and for that not to be considered assessable income. And it is possible to make no money at all and still be classified as a professional artist or creative practitioner. And that's because the rules of creative practice, particularly for those of us who are self-employed, are the same as the rules for anyone else. Let's take a cafe for an example. Let's say you're running a cafe and your expenses have been greater than your income, and so you have run at a loss. That doesn't mean you're not a cafe anymore. It means your taxable income is zero, but you're still a cafe. The same rule applies for creative professionals. You can make little or no money from your creative practice and still be considered a professional for the purposes of tax. It is not about how much money you make. It's about how you actually conduct yourself. And there's so much mythology around this, so I want to make that really, really clear. There is no magic amount of gross assessable or taxable income that makes you a professional. There's no magic amount of income that makes you a hobbyist. It is really down to a whole lot of incredibly subjective factors that I'm going to go through with you now. So I'll do that in a moment. I just want to go back to the questions. Andre, you're confused too. You're new to this stuff. Okay, maybe go back to your TAFE teacher and get a little bit more information about what the 30% is, because I feel like there might be a bit of a communication breakdown there, Andre. Jane, hello. The tax office automatically send out an individual tax return. Do they also automatically send you out a partnership tax return? I don't believe it's automatic, Jane, but you can download what you need from the ATO website, or you can do it through some of their portals. But again, I would suggest getting an accountant to help you before you go down that road. And let me have a quick look to see for questions. Hi, Diana. Again, as a small business which is not yet invoicing enough to register for GST, what would be the benefits? I'll get into that in a moment, very quickly. Let's talk about this topic first. So when the ATO are looking at all of this stuff, and when any of this becomes an issue, they're going to actually look at some of the characteristics of the way you are conducting your professional life. There's more information about this on the business.gov.au website, by the way. The link is in the Dropbox, but it's actually really hard to get information out about this from the ATO. So, see if you can do your best on that front. The reason being that not many people are in this situation. The ATO website is designed for the majority. We are the minority. But the characteristics of business that I'm talking about actually come from those 3 tax rulings that I mentioned earlier. So our situation is so unique that we are not only individuals for the purposes of taxes, meaning that we have tax file numbers, and we are not only small businesses or sole traders conducting our ABN, we are also artists. And artists have special rules available to them because of the nature of the work that we do. These characteristics of business have actually come from those individual tax rulings. And if you're really keen, you can access those tax rulings from our website. I'll go through that in a bit more detail at the moment. So these are some of the questions that the ATO or an accountant might ask you to decide whether or not you are a business or a hobby. And this isn't just a, check the box yes situation. This would be about a whole collection of different ways in which you're conducting yourself professionally. So having an ABN is a good start, but that's not the only thing that makes you business-like in the eyes of the ATO. Let me just move my face because I am in the way. I'm just moving over. Hold on one second. So there we go. So some of the things that would make you business-like would include things like you have an ABN. Your intention is to actually make a profit. Maybe not right now, but certainly at some stage in the future. Again, that differentiates you from a hobbyist. Hobbyists do not require the making of a profit. They are just doing what they're doing for fun. But if you're a business, if you're thinking about yourself in that professional way, obviously making some profit at some point would be a nice idea. You have repetition in your paid work and in your administrative processes. So you have repeat or returning customers or clients, and you have some processes and systems in place to actually help you manage things like your email communication or your financial situation. Having a separate bank account for your ABN income is a good idea and also an indicator of being businesslike, but it's not the be all and end all, of course. Still a good idea. You use accounting systems. I'm going to go through some of those in a moment. Maybe you have a business name. Maybe you have a business plan and you're marketing yourself. Marketing is fundamentally important to the ATO when it comes to working out the difference between a hobby and a business, because businesses have to market themselves in order to attract customers and clients, and hobbyists don't have to do that at all. They're just doing it for fun, doing it for leisure. There's no requirement for marketing. So if you're marketing yourself and you can demonstrate that you're doing that, you're going a good way towards proving yourself to be a business in the eyes of the ATO, if that's what you want to do. Andre's asked another question. Is there a magic number of how much a partnership needs to make to register for GST and how to do this? Okay, I'm going to get to GST questions in a moment, and if I forget, you will remind me. There are 2 big questions that the ATO want to know when it comes to deciding whether or not you are a business or a hobby. And one of the questions is, do you have the purpose of profit as well as the prospects of profit? In other words, are you conducting yourself professionally in such a way that you will either now or in the future make money? And are you conducting yourself in such a way so that you will not only make enough money to pay your expenses, but you're going to make enough money to also feed yourself and keep yourself alive? Maybe not exclusively, but certainly that's going to be part of what you're doing? That's just one of the questions that the ATO might look at. And the other one is your activity planned, organized, and carried on in a business-like manner? Because again, always think about this in comparison to hobbyists. Hobbyists do what they do to have fun and to enjoy their leisure time, and it doesn't have to be particularly organized or process-driven. It's just fun. On the other hand, running a business that is disorganized and doesn't have processes and is a bit all over the place maybe isn't actually business-like in the eyes of the ATO. So getting organized and actually thinking about how you're running yourself, not just in terms of your finances, but also in terms of the whole process that you go through in order to undertake work. Things like, do you sign contracts? Do you give quotes? Are you marketing yourself? All of those things are questions that would make you more business-like in the eyes of the ATO. And of course, because it's the ATO, can you prove any of these things? Can you demonstrate proof that you are in fact operating in a business-like way? Now, some of you might be looking at that and thinking, well, why do I want to prove it? It sounds great. If I'm making money and I don't have to pay any tax on it, why is that? What's the big deal? Well, of course, the big deal is that you also can't claim any tax deductions from the work that you're undertaking. Remember, you can only claim tax deductions from assessable income. Also, I would suggest that some of you who are joining me tonight have worked really hard on your professional practice. You're doing your best to make money in whatever way you can. You've gone to uni or college. You've got some professional experience under your belt. This is your life. It isn't a hobby. It is actually your profession. And maybe you don't get all of your income from your creative practice, but it's still something that you're working towards. I want to reassure you that the ATO understands our messy lives better than you think. They're used to it. Thousands and thousands of creative practitioners go through the ATO system every year. If you're getting any kind of pushback about whether or not you're really a business from your accountant, then that is definitely a conversation worth having. And if you feel like you want to take that next step into professionalism and think more about how to operate in a business-like way, doing so with the support of your accountant is important. If your accountant doesn't support that and they keep insisting that you're a hobbyist and you don't agree, get a new accountant. They work for you, not the other way around. Just thought I'd mention that in case you'd forgotten. They're there to provide you with support and advice. And if you don't feel supported and you don't understand the advice that you're getting, go somewhere else. I think I just had a little rant at you. I apologize. Who has questions about hobby versus business? Because I've covered it in the basics and there's more information in the Dropbox that you can go and have a look at. Oh, so much in the chat. Let me have a quick look. So, I'm a little bit behind. Pamela says, how much percentage should we calculate for the taxes roughly to put in an invoice for the service of an artistic show? Okay. I assume that you're talking about income tax there. If you're invoicing, you never put in a percentage for your income tax. That has to be your responsibility. Your clients and your customers don't pay. As mentioned, they are not responsible for that process. You just have to make sure that you're charging, whatever you're charging, that some of that is earmarked towards an eventual tax bill, possibly. I'll come back to GST questions in a moment. If you run it at a loss, you have to wait for the following financial year for deductions to be taken into account. Kim, no. Any deductions that you claim have to be claimed in this financial year. So that's the rule of thumb for pretty much everybody. So if you're already running at a loss, there's probably no point in going shopping to get a higher tax deduction because your tax bill is going to be zero. But again, that's something that I suggest you go and get some advice about. I can't answer specific questions. Jane, you've asked me about not-for-profit companies. I think you mean not-for-profit organizations. Most proprietary limited companies would be profit-making. That's a whole other webinar, I'm afraid, Jane, but there is more information in the Dropbox about that. Jude, hi. Are you able to tell me why a business I charge for photography work would be taking tax from my payment. If I don't have an ABN, you were doing it for a hobby. Okay, Jude, what would have happened there is that they would have assumed that you were operating in a professional manner, but you didn't have an ABN. And if that's the case, whoever is paying you is obliged to withhold 47% of your fee as tax. That's a specific example. And Jude, what they really should have asked you to do is complete something called a statement by a supplier. Give me one moment while I just find that for you. Hold on. Statement by a supplier. Statement by a supplier is something that you provide if you're doing what appears to be professional work, but it isn't, and you don't have an ABN. I've just popped the link into the chat there. Really, they should have offered you that as an option. They obviously haven't, but that's something that you can be informed about going forward. I think that's the case. Anyway, let me have a look. Pamela, hello. Do you need to show your business plan to the ATO as proof? Not in the immediate sense, Pamela, but if they have questions, if they're confused about whether or not you're actually a business, then they might ask you to present proof in the form of whatever they like, which can include a business plan. The most extreme form of that is if you have to go through an audit, but very often there's an interim moment where you might be asked to provide some kind of proof that you are conducting yourself as a professional, and that could include a business plan. So, and then Error1, I love your name. I know that it is. If my business operates sporadically and you rely mostly on a tax file number, will I be looked on as a hobby? Don't know. Like I said, I can't answer specific questions about your personal experiences. I have not seen your books, but that's a really good question to ask an accountant. So glad you asked me though. Right, let's move on to the GST. You all have so many GST questions. I don't have time to get into the GST because I need to talk about tax deductions and a few other things. So having said that, though, there are resources in the Dropbox for you about the GST. And the main question that everybody was asking me is, when do I have to do it? You have to register for GST, for goods and services tax, when your turnover, new word, is $75,000 or more. Now, your turnover here is the whole amount of money that you make through your ABN. It doesn't include any money that you make through your tax file number. It only includes money that you make through your ABN. So if over the course of a financial year, you make $75,000 or more from your ABN, you're going to have to register for GST. There are benefits to registering before that, but I am going to let you go and have a look at this great resource after this webinar so you can find out more. This resource comes from Xero. I liked it because it was very simple and it had pictures. So I encourage you to go and have a look. Okay, Jude's, how could I get that money back? Jude, you won't be able to get that money back. I'm really sorry. If they've taken it off you already, then it's been withheld from you and it's gone in your bucket. You might need to contact them. 75,000 gross. Well, it's not, gross is a bit of a complicated term, Kim, because this is also gross. But yes, the whole or gross amount of money that you make through your ABN, not what's left after you take out your deductions, the whole or gross amount of money you make through your ABN. Hope that answers the question. Hi, Jenny. You've taken the last year off to help ill family members. I'm so sorry to hear that, and to heal. Are you still a professional, Jenny? I don't know. I love that you're all asking me what your particular situations are, and I hope that means that you trust me, but I don't know enough about your individual circumstances to be able to answer the question. These are the kinds of questions you'll need to go and talk to an expert about and share your situation with them in a bit more detail. I'll tell you where to go for that in a moment. Now, I know you're dying to know about tax deductions, but we're almost out of time, so I'm going to give you the super quick version of how tax deductions work. If any of you have to run right on the 90-minute mark, I totally understand, but remember, you can come back and watch this recording in the same place anytime you like. I will be here all year. We keep this webinar live for the whole of the year, so you can watch it anytime, share it with your friends. We'll refresh it again next June like we always do, but just wanted to remind you of that. So what is a tax deduction? Well, hopefully that is something that we have all remembered. Let me just make my screen come back up again. Here we go. So your tax deductions are legitimate expenses that you can subtract or deduct from your gross assessable income. What's left over is your assessable income, which we've covered off. So the question is always, what is actually classified as a deduction? And it's definitely connected to how you make your money and which number you are using. And there's a lot more information about tax deductions on the ATO's website, including in that video series that I mentioned early on. Now, this is when I want to get back into the numbers situation. If you are making money through your tax file number, you are not going to be entitled to all that many deductions. You're going to be entitled to very few expenses, because the assumption is that anything that you need in order to conduct your work will be provided for you by your employer. There will be some small deductions, possibly related to things like if you're working from home or if you have to use your own vehicle for work purposes, but they'll be pretty small. Of course, if you are making money as a hobbyist, you're not entitled to any deductions at all, because your income is not considered to be assessable. If you are working under your ABN, on the other hand, the deductions that you might be entitled to are very generous by comparison. There are more necessary expenses required for the running of a business than there are being an employee. So whichever number you're using in your professional life actually does make a big impact on what kinds of deductions you're allowed to claim. And that's something that you're going to have to go and look at. Now, there's a lot of text on this screen, so I'll read it out. There are 3 golden rules for what the ATO accepts as a valid business deduction. The expense must have been for your business, your ABN work, not for private use. If the expense is a mix of business and private use, you can only claim the portion that's used for business. And of course, you have to have the records to prove it. So for example, as it says here, if you buy a laptop and you only ever use it for business or professional purposes, you can claim a deduction for the full purchase price. However, if you use the laptop 50% of the time for your business and 50% of the time for private use, you're only entitled to claim half. Tax deductions can be such a complicated realm, particularly for those of you who do make money through your ABN. I want to just go into a little bit more detail about what is not a tax deduction before I go through the list of what is. And I can see there are some questions. I'll come back to that in a moment. So here are the rules for what is not a tax deduction. Anything that is 100% for personal use is not a tax deduction. Of course, if it's money that you have to spend on, feeding yourself and, buying a pair of shoes or toothpaste or whatever it is, all of those personal expenses are not a tax deduction. Anything physical or medical. This is one of the big myths that I hear a lot, and I really want to take this opportunity to bust that open. There are very, very few circumstances in which creatives can claim physical or medical expenses. And it's always worth checking directly with the ATO if you can, or with a specialist accountant. Most of us are not entitled to any physical or medical expenses. The only time we might be is in the circumstances where we have to maintain an extreme level of fitness in order to pursue our professional work. Most of us can't, for example, claim gym membership as a tax deduction because that's considered to be for personal use. But if your creative work requires you to have the levels of fitness expected of an athlete, then you might be able to claim it. That would include, of course, dancers, circus performers, even might include some tech crew. There are some specific physical and medical expenses that are available to performing artists, And there might be some medical expenses available to you as a deduction if you have hurt yourself as part of work. But otherwise, you should probably expect that any money you spend on that stuff is not a tax deduction. And the last one is childcare. If I had more time, I would go into a full-on rant about how unfair that is, but sadly, I don't have time. So I'm saving you from the rant. But if we ever cross paths and we're having a glass of wine and you ask me the question, consider my rant to be activated. Anyway, I shall not rant at you now. So let me just quickly go and check questions before I go any further. Okay, so I've had a couple of specific questions about your own experiences, everybody. And like I've mentioned earlier, I can't answer those. I apologize. I wish I could. So, hi, where do access costs sit in this? That's a good question that I can't answer, unfortunately. It really does, I'm sorry, it just, Indigo, I'm assuming that's you, Indigo. It does, it really depends on how you're deriving your income, whether or not you're getting NDIS support, if it's for a disability situation. I'm sorry, I can't really answer the question. It would have to look into it from your own specific circumstances, I'm afraid. Pamela, hello. If you attend courses to improve your business and your artistic abilities, can you deduct them or part of them? Oh, I'm so glad you asked. Let's have a look at some of the common deductions. So these are the kinds of deductions that are available to pretty much everybody who works with a tax file number or an ABN or both. You can claim up to, thanks, of course. Of course, this is just a general list. This doesn't mean you specifically. This is just in general, but it's just to give you an idea. If any of these things are necessary expenses for you in terms of you conducting your professional work, there is a good chance that they are a tax deduction, but always make sure you check. So there are tax deductions associated with working from home. If you have to rent out a space or a studio to do your work, that might be a deduction for you. Using your car for work travel, you're not allowed to claim the cost of using your car if you're traveling from home to a job, like a tax file number job, but there are sometimes ways in which you can claim the cost of travel when you're working under your ABN. You can also claim other kinds of travel if it's necessary for you for your work, public transport, flights, car hire, whatever they might be. And Pamela, to answer your question, self-education expenses can very often be a tax deduction. So that would include courses, short workshops, that can even include TAFE fees and university degrees. But there is more information on the ATO website about how you can go about claiming self-education expenses. Paying other people, so any money that you have to pay other people in order to do your work, paying freelancers, paying staff, even paying an accountant or a lawyer, plus any of those additional expenses they might have are very likely to be a tax deduction. And of course, office supplies, materials, equipment, and so on. Those are some of the really common ones. Kim's just asked, if you were traveling interstate to meet a client, how do you prove that that's what you're actually there for, to claim the travel? The ATO does, we haven't gotten into record keeping yet, but the ATO does consider your diary or your calendar to be proof. So if there were, in that situation, Kim, there would be presumably proof of email or telephone correspondence between you and the client. There would be a note in your diary or your calendar that would say that's what you were going to do. There'd be a number of different ways that you could prove that. There'd be your petrol expenses or your train fare or whatever it might be. And there would be corresponding proof from the person that you were meeting as well, if an investigation had to be done. Oh, so many questions. Great. Meg, hi. What about attending events as professional development and networking or talent scouting as a creative producer? Sure, Meg, if you've got proof and you can prove that you needed to spend that money in order to conduct your business, it's very possible. Pamela, hello. If you pay services or freelancers from other countries but the business is Australia-based, can you still deduct it? Usually, yes, Pamela, but you would have to go and check. You guys must be getting sick of me saying that, but, you know, I'm just covering my bot. So I understood what you meant, Pamela. That was just the basic list, and then there's everything else. So that includes everything you can see on the screen, and this is when it starts getting more specific. You might also be entitled to claim a deduction for things like paying your accountant, costs of advertising, the money that you pay to an agent. You might have bank fees. There could be clothing or footwear that you might have to purchase. Usually that would mean protective clothing or costume, but still. You might pay for coaching. You might need to buy a computer or some software. You might attend conferences, seminars, or courses. You might just have consumables that you have to use, things like batteries or light globes or whatever it might be. Costumes, donations to registered charities, paying for either attending events or hosting events, all the different insurances that you might need for your professional practice, any licenses that you might need to actually have a look at and figure out, just depending on, what you have to do, marketing and website and mentoring expenses, memberships to unions and professional bodies, any expenses incurred during a pitching process, professional development, professional fees that you have to pay to somebody else like a lawyer or a business advisor, the cost of getting qualifications, repairs, maintenance, specific research, not general stuff, but research about a project or research about a job, stationery, subscriptions, tools, equipment, Wi-Fi, and phone. And there's more than just that. That was just all I could fit on the screen. Got to take a breath. So, Jenny, hi. What about attending a Writing with Writing group? Jenny, I don't know. Again, it would really depend on your specific circumstances. You'd have to look into it. Jude, hi. You donated ceramics to a fundraising auction. Would the value of that work be a deduction? No. It's only a deduction if you actually spent money. So you might be able to claim the costs of actually making the work, but you probably won't be able to claim that as a deduction. Having said that, make sure you go and talk to an expert. Now, I'm sure you've got loads of deductions questions. I'm sure you've got loads of questions. You probably have more questions than what I can actually answer, but I'm glad, because the whole idea behind this webinar is just to give you some shape to some of those questions and to give you the resources to help you figure out where to go to get those answers. The last thing I want to cover, and I'm sorry I've gone a little bit over, is record keeping. There are 5 rules for record keeping. I promise you we're almost finished. Hang in there, just a few more slides. You need to keep all of the records related to starting, running, changing, selling, or closing a business that are relevant for your tax and your superannuation. The relevant information in your records must be stored in a way that protects the information from being changed or the record from being damaged. Digital storage is fine as long as there's a backup or you've saved it to the cloud. You need to keep most of your records for 5 years. You need to be able to show the ATO your records if they ask for them, and your records must be in English or able to be easily converted into English. Now, the ATO are fine with you keeping digital copies of everything. They haven't made any hard and fast rules about paper yet, but they are increasingly accepting digital-only proof of records. The days of us having to store boxes and boxes and boxes of paper are rapidly coming to an end. But, if you, and a lot of accounts are now saying that if you have a paper receipt, for example, you can take a photo of it and then keep the photo as proof that the receipt actually occurred. So there are digital ways that we can go around all these things. I just wanted to share with you a couple of extra supports to help you with that. So the first one is the ATO app. And again, as I've said before, all of these links are in the Dropbox for you already. The ATO app is great. I use it for my, sort of personal situation. I'm sure many of you use it as well. It's really easy. I don't know, they got it right. It's really easy to use. It makes perfect sense. You can take photos of your receipts. You can record travel that you're undertaking. It's really straightforward, and it's free. So I do recommend that if you're just getting started with record keeping, then the ATO app is a really useful tool. Thanks, Tim. Some of you might need something a bit more robust. So if that's the case, I want to suggest that you have a look at cloud accounting. Now, cloud or online accounting means that you can use one of these many different resources available to you to help you actually keep track of your finances and to keep records of everything. And although all of these systems are really good, the one that we usually recommend to people is Rounded. Now, I want to make it really clear, this is not a paid promotion. Rounded do not give us any money to say this. We genuinely recommend Rounded to people because we think it's the best cloud accounting system available for sole traders and individuals. And we like them because they're Australian, because they have been set up specifically with sole traders and freelancers in mind, and because it is a much cheaper option than some of the more expensive cloud or subscription-based processes. Plus, if I could be completely honest, part of the reason why we like Rounded so much is it's pretty. It makes pretty pictures to help you get a better understanding of your finances. Amazing. So if you haven't currently used Rounded and you're interested in finding out a bit more about it, you can follow the link in the Dropbox. And another one that people have been talking a lot about is Henry. Now, Henry is an app that allows you to manage your taxes a little bit more easily. Of course, I have a little bit of a problem with Henry. I've been spending this whole webinar encouraging you to think about your tax, encouraging you to embrace the idea, learn more about it, figure out how to empower yourself with knowledge and information so that you can better manage your tax responsibilities. Henry wants you to never think about tax again. So Henry and I have a problem. We disagree on how to approach your tax situation. Having said that, you are most welcome to go and have a look at the app and learn more about it and see if it's right for you. You do you. I'll leave my rant where it belongs. There is not a single piece of technology, however, that is going to be as good as time. Time is the most valuable resource that you can apply to your taxes and to your wider financial life. We did a webinar a few years ago now called Money Day, which is all about how to actually incorporate keeping track of your finances, including your taxes, as part of your ongoing systems and processes for your professional work. The link to this webinar is in the Dropbox. It's also on this channel, so you can go and find it again when this webinar is over. And I highly recommend that you have a look at it so that you can stop thinking about tax as a one-off, maybe never happen again, don't think about it situation, and realize that it's just part of your overall financial literacy and maybe worth keeping an eye on in a more regular way. So again, as mentioned, rant concluded. I want to apologize for the fact that I went over. I'm sorry. We had lots of technical difficulties at the beginning, and I'm thrilled that so many of you had so many questions, which also makes me really happy. The time now has come for me to wrap this up. So with that in mind, let me remind you again about the Groovy Accountants. That's the list of accountants that you can find on our website who specialize in creative and cultural industries. I think I hope at least that the thing that you've taken from this is that for your very specific, complicated and individual circumstances, it's best to get an expert to help you out. The Groovy Accountants are the experts. Yes, they are going to be more expensive than going to see a general accountant, but it will be worth it if they help you and support you in the right way. So, you guys are so sweet. Thank you. I also want to remind you about the Dropbox yet again. Let me put that into the chat one more time so that people can access what they need. Oh, look at you all being so delightful. Oh, see, now I definitely need to go and have a glass of wine. Everything you need is in there. Remember, you can share that with other people and all the rest of it. Also, everything that you need is on our website. You can go and check that out too. For those of you who are new to the world of Creative Plus Business, I also recommend that you join our newsletter. We send out a newsletter twice a month that tells you about stuff that's coming up or things that we're doing, webinars and workshops that we're running, resources that we're publishing, and almost everything that we produce for you is free or at a low cost. So please do sign up to our newsletter so you can see what we're up to and keep in touch with us, we would love that. We've got a whole bunch of new webinars coming your way. We haven't launched them yet because we're just wrapping up this financial year, but stay tuned. We've got a bunch of stuff coming up, which is going to be so exciting. I'm really looking forward to the next 6 months worth of webinars. You can keep them all. Oh, thank you for loving my diagrams. I'm not entirely sure that we would call them drawings. I feel like diagrams is more appropriate. Look, here they are. Look, hooray, curly head guy. Lastly, I want to say thank you as well. Thanks for joining me. For those of you who come regularly and for those of you who are new, just remember that Creative Plus Business has, you've got this, we've got you. Creative Plus Business is always going to be here to help you navigate your way through the tricky topics of business, money, and marketing. And I hope I see you again next time. Thanks so much for joining me, everybody. I really appreciate it. And hope you can go forth and get the answers to all of those great questions that you asked me. Have a great evening, and we'll see you next time. Bye, everybody.